theme for World Humanitarian Day this year was Real Life Heroes, recognizing the challenges that humanitarian and development workers face each day. These heroes are rarely the stuff of movies or video games, but make no mistake, they do fight villains, they help people stand up to the enemies of poverty, injustice, and hopelessness. I know the risks are real. I live and work in Northeast Syria. I am a senior protection officer and work with teams to develop and coordinate activities in camps for refugees and displaced people. As these heroes put themselves at risk to support the vulnerable communities, we must be sure that workers too are supported. Too often, the burden carried by those on the front line often goes unrecognized. Across programs in Northeast Syria, we support more than 95,000 people, working to meet their physical needs and protect their well-being. My team and I take this seriously, as many of the newly arrived population have had a difficult background. People have suffered the loss of communities, deaths, and all types of physical and emotional wounds. This is why we prioritize psychosocial support to help people cope with the trauma and find a way to build forward. Yet, as we help communities, there is a huge strain put on staff. We work in pairs, one male and one female, and coordinate closely with our security team. Most of the people in the camps are children, but there are adults with extremist ideologies. We work with many people who are resistant to help. We are often threatened. We see and hear a lot of difficult things, and it stays with us. Staff are local and can face harassment from their own families and their communities who disagree with providing aid to refugees. As a woman, I know that we face additional challenges on many fronts. Together, it takes a toll. When Turkish forces moved into Northeast Syria in October 2019, more than 200,000 people were quickly displaced, and our teams never stopped working. We did this while worrying about our own safety, families, and homes. Many of our staff live close to the border and had to flee. Several colleagues went from working with displaced communities to being displaced themselves. After that experience, my commitment to the people we work with has increased because I understand suddenly not being in my home, far from my family. We had support from our colleagues around the world and implemented our duty of care plan, including ensuring that the teams were paid. There was also certified therapists brought in to provide psychosocial support. Staff could contact her directly to set up an appointment, and all services were confidential. We didn't track names or what was discussed. While some staff did reach out for support, we found that cultural norms left many hesitant to share their problems. Just as things were settling down after the attacks, coronavirus hit. Again, we implemented emergency plans to protect beneficiaries and deliver critical services while navigating changing local restrictions. This was all done as many of us had to work from home for the first time, and as we worried about our own loved ones. Given these stresses, psychosocial support was again made available to staff. Learning from the earlier experience, we established group sessions, conducting 11 webinars. One of our team leaders shared his own concerns and challenges on the calls. His leadership set an example and let others know it was okay to be vulnerable and to discuss these issues. After the group webinars, we saw an increase in requests for individual sessions. However, surveys later found that the group sessions were preferable. We will keep this in mind moving forward because there will always be another emergency. Humanitarian workers' lives are far from glamorous. The humbling, grueling work too often goes unrecognized. But we are here and we are making a difference with a sense of shared humanity, empathy for others, deep commitment to the cause, and a drive to address injustice. To do that, we need to take care of our own well-being because that's what empowers us to continue taking care of others. We can do this, but sometimes the heroes in the field need a bit of help.
Thank you so much to Heistan Issa and Bluemont for that view from the field. And we can see the impact on the development workers there as well. Good afternoon. My name is Ann Simmons-Benton, and I am the Deputy Chair of SID Washington. Today, it is truly my honor to introduce our closing plenary for Day 1, which focuses on development impact. We are very lucky to be able to hear from about how the International Development Finance Corporation, or DFC for short, came to be established from the very beginning by Rob Mosbacher Jr., and how the DFC is advancing its development impact by the current Chief Development Officer, Andrew Herscowitz. Robert Mosbacher Jr. has a long history of leadership, focusing on the intersection of international development and the private sector. Rob is currently chairman of the board of Mosbacher Energy Company in Houston. Previously, Rob served as the 9th president and CEO of the Overseas Private Investment Corporation, or OPIC, from 2005 to 2009. OPIC is an independent agency of the U.S. government that facilitated over $25 billion in investments in developing countries around the world. As mentioned earlier, Rob played an instrumental role in the drafting and the passage of the BUILD Act, a bipartisan piece of legislation passed in 2018 that combined OPIC and the Development Credit Authority of USAID into the new DFC. Rob is a leader who has served his home community in Texas, as well as our international community over the years in many leadership and governance roles, including at Global Communities, the Center for Global Development, the Consensus for Development Reform, and the Initiative for Global Development, among others. I also have the honor to also introduce Andrew Herscowitz, who is the first Chief Development Officer, or CDO, at the DFC. As CDO, Andy leads the DFC's efforts to pursue the most highly developmental projects in less developed countries. As many of you in the audience know, prior to this role, Andy was at the U.S. Agency for International Development, where he led Power Africa for 7 years, rose to the highest level in the Foreign Service as Minister Counselor, and served overseas as Mission Director, Deputy Mission Director, and RLA, or Regional Legal Advisor. When Andy joined USAID in 2001, he served as the lawyer for USAID's Office of Development Credit, which has levered hundreds of millions of dollars in private sector funds through its loan guarantee program, an office that is now part of the DFC. Andy has received many awards during his illustrious career, but I would like to highlight one in particular. In 2018, Andy was awarded the Service to America's Medal, which is given to U.S. government officials who have provided the greatest benefit to the American people. I am very honored and look forward to this very unique opportunity to hear from these two leaders who are changing the face of development, Rob Mosbacher Jr. and Andy Herscowitz. Thank you.
Thank you, Ann, very much. And good afternoon, ladies and gentlemen. I'm delighted to be part of this and delighted to be with my friend, Andy Herscowitz. Let me try to start this discussion by giving you a thumbnail sketch of what the BUILD Act did and where the Chief Development Officer fits in that architecture. So all of us who either work at OPIC or were involved with OPIC, and I was from 2005 to 2009, wanted constantly to add authorities to the agency that would enable OPIC to compete head-to-head on a level playing field with all the other development finance institutions around the world. And really the impetus for the BUILD Act was to provide those new authorities, or those new powers, to a consolidated agency which combined OPIC and the Development Credit Authority. Now, let me just give you a thumbnail sketch of 4 or 5 of those new authorities. One that was wanted forever by all of us that worked at OPIC was the authority to invest equity in projects as opposed to simply finance projects. Second was the capacity to provide technical assistance or small grants, particularly to projects that had promise but perhaps finished just short of the goal line in order for them to be bankable projects. Third, to eliminate or at least reduce the necessity of a U.S. nexus. So whereas until the new Build Act, there was a requirement that 25% of every project be owned by an American. Today, under the new authorities of the Build Act, preferences be given to Americans, but if there's no American and the project is worthy, it can be organized and supported without American nexus. Fourth, we've done transactions for years, principally in U.S. dollars. Rarely is there some opportunity to do something in local currency, which has been a disadvantage. Now, the new agency has the capacity to do projects in local currency. And fifth, it increased what we call the contingent liability limit, which essentially is how much in the way of outstanding commitments can the agency have at any one time, from 29 billion up to 60 billion. So it literally doubled the capacity of the agency to engage in projects. Now, one of the most important elements of the Build Act was the very strong premium placed on developmental impact, on how to measure it, on how to track it, on how to disclose it, and as an integral part of that, it was thought that it would be good to have a chief development officer who could be the focal point of those responsibilities. There are also high premiums placed on international and U.S. collaboration and cooperation. And so the Chief Development Officer was given the responsibility of helping coordinate intergovernmental relationships as well as partnerships around the world. And so I want to start with asking Andy to talk a little bit about the role he has, the specific sort of mandates he has, particularly in terms of both internally as well as collaboration with agencies like USAID. And then, if you would, touch upon the development strategy that you've been working on. And the cat cannot answer for you.
And the cat, as the person who's ever done it, this is why cats are really, the cat decides to jump on my lap for the first time. That's the first time during this whole thing. Cat doesn't even like me normally. So, Rob, thanks a lot. And I'm going to share with everyone, and you're going to get mad at me for saying this, but I remember when I approached you about the Chief Development Officer job, and one of the things you said to me was that you didn't think I would like it because you thought that the job was going to be focused a lot on almost being a cheerleader between USAID and DFC. And so it is to some degree that, but it's a lot more, and we made it a lot more. And I got to thank you for all the advice and guidance that you've been giving me. There's no position has more written about it in the Build Act than the Chief Development Officer. But if you read it too closely, you think the Chief Development Officer is basically doing almost everything in the agency, and that's not the case. There are a lot of really fantastic, talented people who came from OPIC, who are at DFC, and who came from DCA, who are already doing a lot of these functions and are doing it much better than I ever could do it. And so I view it as part of my role as looking at what does the Build Act require of the Chief Development Officer. It's really what are the functions that the Chief Development Officer is supposed to be doing. And part of it is making sure that our projects are in fact highly developmental. And I'll talk a little bit about the IQ score, but also that we have close coordination amongst the interagency, and that we have very close coordination with the private sector, other foundations, other DFIs and donors. And so that's not a job for one person when there are people who've been doing a lot of these things for many, many years. And so one of the things that we've done is sort of mapped out all the things that need to be done or what can be done better. Taking some of the learnings that we got from Power Africa, for example, of how can we be more methodical about collaboration with other DFIs, with foundations, and also showing how DFC can add value to our partners. So one of the challenges that I faced with USAID, and I think a lot of people on this call can appreciate, is we rely heavily on USAID for deal flow and for technical assistance, and even for money as well. So written into the Build Act, one of the things that Rob didn't mention is that DFC has transfer authority from USAID. And that means that the DCA deals that USAID had done, the loan guarantee deals, for people who aren't familiar with DCA, will continue, to come from USAID missions throughout the world, and that means often transferring of resources from USAID to DFC. And so we rely on some of those deals, particularly in the low income and the lower middle income countries. And then another thing that my team and I did, which isn't required by law, well, one, DFC had set the goal of trying to ensure that at least 60% of our projects are focused in low income and lower middle income countries. The law, the Build Act does say that we should prioritize work there. But what it doesn't say is what is development. And so what we decided to do is embark on drafting a development strategy. And it's the first ever development strategy that's been done. And it looks both at the inputs, the investment inputs that we're doing, but what are the outcomes? What can we get out of those investments in terms of basic services to people? So I can talk a little bit more about that, but that's essentially what the Chief Development Officer does. I do serve as a cheerleader to some degree between USAID and DFC and with other agencies, but I'm also the voice of development in the investment committee, and I try to bring the experience of what I've learned from many of the people on this call over the years of what really is developmental, what works, what doesn't work, how we should properly measure, and most importantly, credibility, making sure that if we're going to say something that's going to achieve certain objectives, that we figure out a way to get the baseline data and that we can count that data, and that we have a way to make sure that we have good monitoring and evaluation as well.
So speak to what the IQ is, or impact quotient, how it was created, how you see it being applied, what it's aimed at trying to capture.
Yeah, so this again goes to the fact that I stepped into a role that said that one of the roles of the Chief Development Officer is to develop this impact assessment tool. And literally before I started, they dropped on my lap a beautiful guide on measuring impact. And the team at OPIC and working with USAID and had brought a lot of input, had worked on this for probably about a year before I arrived. So I was able to go in and offer very few changes to it. But what the impact quotient does, it's the IQ, is it measures the projected impact of every deal. And it's used several different ways. One, it looks at the transaction itself and assesses it, looks at it under three different pillars. One, inclusion. Two, growth or economic growth. And three, innovation. And then a lot of the things that we think about in terms of number of employees who might be from marginalized populations would fall under inclusion. Innovation could be anything from new technologies to the first time a deal of this type has happened in that particular country. And then it assigns scores, and there's actual algorithms that are used. So for example, if a project is going to add 40 high quality jobs, it might receive a certain score. If it's going to add 400 high quality jobs, the score will be a little bit higher. And it aggregates out all of those things and looks at each deal. But a couple of things that I love about the IQ, it's not just looking at the transaction as it's presented to us, but it's part of our attempt to help our clients in the transactions become more developmental. So for example, we can talk to a client and ask them to adopt policies that might provide greater protections for workers than otherwise might have been required. So using the IQ as a guide when interacting with the clients before the deals even move forward is tremendously useful to us. And then even when a deal does come for screening and we decide that it may not be as highly developmental as it could be, we will make recommendations that we go back to the client and ask them to make certain changes. And we can't twist their arm or force them to do it, but we've been pleasantly surprised that the vast majority of the time, there are tweaks that the clients can make to make their projects more developmental.
Let me ask you to talk a little bit about doing projects in higher risk, lower return areas. Again, some of the guidance from the Build Act was very clear that basically none of the DFIs in the world, nor multilateral development banks, are heavily invested in the bottom of the pyramid economic opportunities. There are lots of reasons why. High failure rate, high requirement for vetting deals when you don't have boots on the ground and so forth. But this legislation clearly instructs the DFC to undertake some measurable portion of its portfolio in low-income countries that are high risk, low return. How do you all see that, and how are you responding to that guidance?
Yeah. So you got one thing right about me with respect to being a cheerleader when I took this job. One of the things that people quickly discovered is there's almost no deal that I don't like to do. And what I try to explain to people is that in the low-income countries, in some of the most fragile states, Haiti, for example, private sector has been doing business for years. There are companies, local companies that have been operational sometimes for hundreds of years. I think back to my time with DCA early on, and we presented the first loan guarantee project in Haiti. And I remember arguing before the credit review board that despite the fact that there had been a coup 6 months earlier, the banks that we were working with had been operational for 40 years. And if anybody knows how to manage risk, it's these banks. And those projects move forward. And my recollection is they perform quite well. That's the story that I'm trying to convey and to tell. But there are also some constraints that I've identified since I've been at DFC. And the Build Act was very, very well intentioned. It recommended that we focus on prioritize projects in low income and lower middle income countries. And I agree with that 100%. But what a lot of people don't realize is the risks associated with doing deals in low income and lower middle income countries means that the cost to the US government to do those deals, not saying that the ultimate cost, because a lot of these money gets paid back, but the cost in order to access the lending from the US Treasury, we call it the subsidy, is a lot higher. So just like USAID with DCA would have to come up with money to buy the coverage from US Treasury, DFC has to do the same for a particular project. A lot of projects that we do require no subsidy. If they're in upper middle income countries, it's low risk, there's going to be high enough fees. We'll cover, the expected potential default from the overall US Treasury pot. But this subsidy cost really is a constraint for DFC. I compare it to buying a life insurance policy, just try to explain to people. The subsidy cost is the premium that you would pay for a life insurance policy. It's what DFC and other US government agencies pay to the US Treasury for coverage. Now, to buy that, the premium to get coverage or a loan guarantee in a low income country is like buying a life insurance policy for a 65-year-old man. The premium that you'd have to pay to US Treasury, if you're thinking about like a group health insurance policy for doing a deal in Mexico or an upper middle income country, it's like buying a life insurance policy for a healthy 18-year-old. It doesn't really cost anything. In fact, it's a win. So those are called the negative subsidy deals. What I've been finding is there's a big cultural difference between what OPIC traditionally had done in terms of always returning a large return for the US taxpayer with not a tremendous amount of pressure, and Rob, you can correct me if I'm wrong, to do as many deals in low income countries, but a general aversion to deals that would have a high subsidy. Whereas at USAID, everyone is very accustomed to just coming up with the grant money that was the appropriation that's necessary to pay for the subsidy, because on the aid side, to leverage $20 million of financing with $2 million is a huge leverage. So that's for aid folks, that looks like a win. On the DFC side, to tap into the limited pot of money for subsidy, $2 million means that you're tapping into that limited pot. So people are wondering, can we try to raise the fees, or can we look for other ways to reduce the risk? And this is a cultural divide that I'm trying to bridge to some degree. The other issue also is trying to make sure that aid, I reach out to aid frequently, and everybody always looks at me like I'm trying to pick their pocket. It's really important that aid understands that DFC, we're not just America's development bank. We are literally USAID's bank. And USAID now has many tools available to it, far beyond just loan guarantees, that can help USAID leverage its appropriations in a really significant way. An aid mission can turn $5 million into a $50 million loan. And you could go even much bigger than that. But aid missions have the ability to do billions of dollars of lending through their appropriation.
Yeah, I would add, even though I'd say OPIC has an incredibly talented team which finds ways to do deals that are highly risky and low return with the tools they had. Nevertheless, it is a culture in which people do not embark upon deals where they think there's a high likelihood you're going to lose money. And as a result, with this guidance or cover, if you want to call it that, from the Build Act, we're not suggesting they plow 25 or 50% of their portfolio into those kind of projects, but they can put a measurable part of the portfolio into those low return projects and even lose some money. And we just need to make sure the Congress understands that we're following your guidance. This is not a function of poor management. Let me ask you, if you would, to talk a little bit about how some of the technical assistance or small grant authority would be used. I would just say, when I was head of OPIC and we needed help with small grants to do something like help create an understanding among small and medium-sized enterprise finance institutions of how you lend to people who have no collateral, I had to literally beg my friends at AID to provide us a little bit of money. That's part of the reason why this small grant TA is in this bill. How do you see that being used? What do you think it'll help facilitate?
So it's a really small amount of money. I think a lot of people saw when DFC got this authority, the amount of money that we actually have for technical assistance is like smaller than any USAID mission, that I know. So we are still heavily dependent on USAID and MCC and USTDA and others. And so what's more important to me than using our technical assistance authority is making sure that we're sharing information as early as possible with other agencies, particularly USAID, to find opportunities to ensure that find opportunities for aid to have complementary technical assistance to the deals. One example that I give is we had a project in Ecuador of about $400 million in lending that was moving forward, and aid had just announced that they were going to reopen a mission in Ecuador, but because of COVID, they weren't able to mobilize very quickly. And my thought was, well, this is a great way for USAID and DFC to work together and really make a strong statement that the U.S. government is committed to reopening. If we could combine some technical assistance from USAID, and it could be modest, to work with these banks that are providing $400 million of lending combined, that's a huge statement that the U.S. government is able to make, and it demonstrates a strong commitment. So we've been doing regular briefings for USAID's regional leadership and other bureau leadership to give them sort of a heads up about what's in the pipeline, because the way that our budget processes work are very different. And for anyone who's former USAID, you're planning a year, 2 years in advance for how you're going to spend your money. DFC, a project can come up and 6 weeks later, we can be committed. And so we're very, very reactive. So part of what we've done is we created this development finance coordination group, which is a working level group with the people who know how the money moves, and to try to figure out how can we get ahead of the ball, get as much as possible and plan as far as in advance and create as much flexibility so that we have actual joint agency tools. Maybe we do a joint agency call for proposals where DFC commits to financing, aid commits to some technical assistance, perhaps U.S. Trade and Development Agency will commit to providing a feasibility study. And this is how we want to bring all of the U.S. government together so we can have a much greater impact.
Let me ask you to touch on foreign policy and how it's sort of integrated into decision making on projects and whether or not there is a path to go to middle or upper middle income countries if there's a compelling foreign policy need. How does that sort of work at this point?
So we have a triple aim. We've got, and it's in the Build Act, development isn't the only priority. Foreign policy is another significant priority for DFC. And then we also have the third aim of earning a return for the U.S. taxpayer. And we recognize that in some of the more difficult environments, you're not going to earn as much of a return for the U.S. taxpayer. But on a portfolio-wide basis, we want to make sure that we are earning that return. In addition to the IQ score that measures development impact, we also calculate a foreign policy score. It's not as scientific because foreign policy changes. One day, a country we can be not having a great relationship with, but then we can negotiate a trade agreement with them and suddenly they become our best friend. So it's less scientific. I think we all understand and appreciate that. So we do look at each project first on development, which does in fact receive a score, and then the foreign policy, it's either rated as aligned, highly aligned, or critical. And then we also look at what the return is on the project as well. So all of those things get balanced. But on a portfolio-wide basis, we're committed to doing highly developmental projects. In fact, the development strategy that we plan to launch next week, I would imagine that about 90% of the project, if not more, that we're currently doing would fall under this development strategy. And that's because development and foreign policy are so highly intertwined.
And how about, if you would, talk a little bit about what you've observed is happening as a result of elimination of the U.S. nexus? What kind of projects can that enable that were not possible before?
So I'm really excited about this, not because I think that we shouldn't be looking for opportunities for U.S. companies, but I'm of the belief that it actually creates more opportunities for U.S. companies. One of the exercises that my office is undertaking is we're going to start to do virtual town halls with countries, working with State Department, USAID, Commerce, and others, where they identify the top 10 to 50 companies, local companies in that country. One of the last trips I took as the coordinator for Madagascar, for Power Africa, was to Madagascar. And there was a company that was a Caterpillar distribution company, which was local, family owned, that had been operational for 90 years. Those types of companies were not eligible for DFC financing in the past. What I like about this is, number one, it helps create sort of the self-sustaining, sustainability in the country by building local businesses. But what it also does, it creates trade leads for U.S. companies. If we didn't know that this local company in a developing country was bidding and got the contract to build a power plant, for example, we wouldn't, and if we got involved in financing that, that also gives us access to information about potential opportunities for businesses, including small and medium businesses in the U.S., to provide parts and components, whether it's going to be or services or legal services or consulting services. So it actually gives us more information about how we can create good trade partners and better linkages on the ground in the countries.
Mm-hmm. You've talked some about better coordination, collaboration among the USG. What do you see as the opportunities for the DFC to collaborate and leverage its resources with other DFIs or other multilateral development banks?
Yeah, in my ideal world, we would have joint deal teams with other DFIs. And one of the things I struggle with is when people describe other DFIs, including DFC, as their competitors. Because ultimately, we're public institutions. We're supposed to be filling this gap between private banks, commercial banks, and development institutions like USAID. And I feel like too many people want to play too close to being the commercial bank. We need to be more over here towards where USAID and others are, and working how to collaborate, looking at how we can jointly do due diligence on a project together, share deal flow, share information so we can access more people. There is such a massive need for financing, especially higher risk financing in countries and amongst populations that traditionally are neglected. And a lot of people want to run to winners. A lot of the DFIs, and this is one of the changes that a lot of people don't like, but I do like about DFC, a lot of DFIs are completely dependent on their own returns that they get for financing themselves. So they're going to naturally always lean towards the deals that are going to produce the highest return. Because we rely on an appropriation, that gives us the breathing room to really pursue some highly developmental projects that might not earn a high rate of return. But we're very, very, we've got partnerships with other DFIs, but we need to continue to step that up.
Yeah, it's you mentioned that we've been returning money to the Treasury for virtually since inception, and that's $200, $300, $400, $500 million a year. If you add to that the returns that will be earned on even relatively low return for private equity funds in which the DFC participates, it could dramatically increase the funds that are sent back to the Treasury Department to strengthen the DFC standing. We're about out of time. Andy, here's a quick question that is not that easily answerable, but we're speaking to a group of people who have committed their lives, or in many cases are deeply involved in development. And private sector driven development has not always been at the forefront of tools available, particularly when compared to official development assistance. How do you explain to people the importance of entrepreneurial capitalism or private sector driven development as part of the overall picture of how we reduce poverty in the world? And you got about a minute to answer that.
Yeah, look, I'm a huge fan of this. I mean, it's transactional driven development. And this is what we did with Power Africa. We will spend millions and millions of dollars year after year trying to figure out what the impediments to private sector investment are in a country and look at the whole sector. Until you actually have a live transaction, that helps you really hone in on what the impediment is. And I really hope that USAID and others will start moving more towards that transactional type of development, because especially in the upper middle income countries, where aid, like one of my biggest criticisms of us is that we get to a point with the country where we say, okay, you're on this journey to self-reliance, you're now self-reliant, and now we're gonna pick up and go. That's the opportunity. That is the very time when the US government has such goodwill with the country where we've been working for 50 years and we have the contacts and relationships. That's when we should be converting to a sustainable trade partner model. And that's when our technical assistance should be transactional in nature. So rather than just doing, providing technical assistance to the whole health sector, you find a health deal that's going to benefit a US company, benefit local companies, and see what's the impediment for this deal to move forward. And that's how we build long-term economic relationships. That's true development. That's true trade. That's true economic statecraft. And we need to do more of that.
That's great. Wonderful. Well, thanks for your time, Andy. And ladies and gentlemen, thank you for indulging us and allowing us to share with you a little bit about the new DFC. You can see why so many of us that have been around this space are so excited about the opportunity ahead of us.
Yeah, and I do want to mention that Rob also is the chair of our Development Advisory Council, which is a fantastic group of people, includes a lot of people that many of you know who work in the development space. Paul Weisenfeld, former head of the Bureau of Food Security at USAID, and Dr. Ellen Johnson-Searley. So we wonderful people on our Development Advisory Board. So thanks, everyone, and thank you to SID for hosting us.
Well, let me just jump in here quickly to thank you both for being with us this afternoon. I'm so glad to hear from you. You had such intelligent remarks to make about where things are with the DFC. Rob, you and I have talked about the DFC so many times, and you always bring clarity to our proceedings. I really appreciate you. And Andy, it makes me happy to see somebody with your skills and your development background playing the role that you're playing at the DFC and as a bridge to USAID. So thank you both very much. We really appreciate it.
Thank you, Wade.
And now is my pleasure to introduce our next session, which is the last session of today. And I have the real honor of introducing David Milliband, who's going to speak to us in just a minute in recorded remarks. And I want to give you a little bit of information about David, although he's well known to many of us. David Milliband is the president and CEO of the International Rescue Committee. He oversees the agency's relief and development operations in more than 30 countries and its refugee resettlement and assistance programs throughout the United States. He also oversees the IRC's advocacy efforts in Washington and in other capitals of the world for the most vulnerable people among us. Most of you know that David has had a distinguished political career in the United Kingdom. From 2007 to 2010, he served as the youngest foreign secretary in 3 decades, driving advancement in human rights and representing the United Kingdom throughout the world. His accomplishments have earned him a reputation, in former President Bill Clinton's words, as one of the ablest, most creative public servants of our time. In 2016, David was named one of the world's greatest leaders by Fortune magazine, and in 2018, he was inducted into the American Academy of Arts and Sciences. As the son of refugees, David brings a personal commitment to the International Rescue Committee's work. He believes that we can rescue the dignity and hope of refugees and displaced people, and if we help them in the process, we will rescue our own values. So thank you very much, David, for your remarks.
Hi everyone. I'm sorry I can't be with you in person for your meeting, but I'm happy to have been asked to provide some remarks. I hope that despite the limitations of remote working, I'm able to get a few points across. I've been asked to speak for 10 or 12 minutes to frame some of the considerations that you'll be discussing in the course of your meeting. To introduce myself, I'm David Miliband, President and CEO of the International Rescue Committee. We are a global humanitarian charity and the largest refugee resettlement agency in the US. We were founded by Albert Einstein in the 1930s. You can't get much better than that as shoulders to stand on. And we now work in about 40 war-torn or refugee hosting countries around the world with about 13,000 employees, 17,000 day volunteers, helping people whose lives are shattered by conflict, disaster or persecution survive, recover and gain control of their lives. That mission is important to us. We thought very hard about who we serve, where we work and what counts as success, and that's how we ended up with framing our agenda in terms of people living in crisis rather than in terms of quote-unquote humanitarian or quote-unquote development sectors. That's a point I'm going to come back to, because I think your notion, your framing of international development, the Society of International Development allows for that kind of crisis focus. I'm going to make 3 points really to you today, as well as a final call for you to work more closely with us. The first claim is that there was a crisis pre the pandemic. Secondly, that COVID is both a cause of pain, but also a symptom of a system that isn't working. And thirdly, I'm going to offer some thoughts about how to go forward. As I say, I'll try and race through that in 10 or 12 minutes. First of all, it's really important that we don't have a sense of golden ageism about the pre-COVID, pre-March 2020 situation. The Sustainable Development Goals were off track in 80% of fragile, conflict-affected states. The number of refugees and displaced people hit 79.5 million for the last figures. About 29.5 million refugees and asylum seekers, about 45 million people displaced within their own countries. And then on top of that, 3.5 million asylum seekers, so 29.5 million refugees. Combined together, giving over 1% of the global population, 79.5, 80 million people in total, breaching the 1% figure for the first time ever, a symptom of a world gone wrong. And also, I think, a crisis in the sense that in the 40 or 50 civil conflicts going on around the world, the laws of war increasingly neglected. I call that the age of impunity. It's symbolized by 43 children in a coach in Yemen being bombed by the Saudi-led coalition. It's symbolized by our 2 aid workers in northwestern Syria being bombed by the Syrians and their Russian supporters. That age of impunity is a driver of the displacement crisis that we deal with as a relief agency. I think the key point about the crisis pre-pandemic is that when we think about tackling poverty around the world, which after all is what international development is about in significant part, the geography of poverty was changing. The geography of poverty was increasingly focused on conflict-affected states. I think 45% of the world's extreme poor live in conflict-affected states now. That number is expected to rise to, I think, 80% by 2030. So first point, before the pandemic crisis, we were in crisis, or at least the people that we serve were. Secondly, I was asked to discuss how has the crisis affected us and the people that we serve. How does it affect international development? I think it's important to think about a quadruple emergency, and maybe I can just run through those. The first part of the emergency is obviously COVID itself and the health impacts that it has. As we speak, we're breaching new records, not just in the US, but around the world for the number of cases, but also the number of deaths. And COVID is clearly a killer, but it's also deeply transmissible in ways that are not clear, asymptomatic transmission, and that makes it doubly or triply dangerous. So the first emergency is the impact of COVID itself. which, to be absolutely honest, hasn't run as rampant as I expected in the places that we work, maybe because of the demography of our populations, maybe because of the outdoors. It spreads much less in outdoor circumstances than in indoors. We know that from our own situation. The second emergency is health beyond COVID. The interruptions of vaccination campaigns, the interruptions of immunizations, the fear that stops people going to health clinics, the impact on health workers that closes health clinics and makes malaria a much greater danger. I think we're seeing now in the second 6-month period of this COVID crisis that the non-COVID health effects are as, if not greater than, the COVID health effects. The third emergency is obviously an economic emergency, a livelihoods emergency. You'll have seen the figures about the number of people being pushed into poverty, 500 million people. In some figures, the job losses, but also the dire warnings from the World Food Programme about the number of people being pushed into hunger and the return of famine. The fourth emergency is a political emergency. COVID has not just caused social and economic pain, it's also caused political pain. In a way, the symbol of this is the breakdown of American support for the World Health Organization. That's a very significant symptom of a multilateral system that's lost confidence amongst a key stakeholder. But that sense of a leaderless world, a disorganized world, a fragmented world, what Ian Bremmer calls a G0 world, that is very evident. It's evident in the rise of bilateralism rather than multilateralism. And it's evident in the increasing concern that this pandemic is a warning that there's more trouble to come in our interdependent, hyper-connected world, and that we have global governance that is underpowered in fundamental ways. I certainly believe that. So third part of what I was going to talk about, what's next. I think the first starting point is to recognize that management of the global commons is a central responsibility of government, that it is imperative that in this hyper-connected world we recognize that we're only as strong as the weakest link in the chain. That's been exposed by COVID, and that weakest link can be at an airport, it can be in a health system, and of course it's not confined to health pandemics. The nature of interdependence today is economic, it's also security, it's also climatic, to do with climate change. And that means that the public goods that include hosting of refugees, tackling of crises, need to be fulfilled, notably by those who have wealth and power, but has to include all. And related to that, I think, is a very stark warning, really, which is that when governments are running away from big, complex global problems, NGOs, foundations, the private sector have to step up with solutions, and that's certainly what we're trying to do at the International Rescue Committee. The second part of the agenda, I think, going forward, is to think about what is the new paradigm for sustained intervention in crisis settings in a way that learns the right lessons from the humanitarian and development sectors. In most of the places that we work, there are humanitarian efforts and development efforts, and too often the twain shall never meet, and that doesn't help anybody. Siloed programs are unlikely to deliver sustained progress. We're a humanitarian agency, but we use many development techniques. We're now the largest research contributor in the humanitarian sector. We do more impact evaluations than anyone else in the humanitarian sector, and we're proud of that because we want all of our programs to be evidence-based or evidence-generating. But our work is constrained by the fact that we don't have a proper system for intervening to help the victims of crisis. We have a sector of activity, but not a proper system with shared outcomes, shared incentives, shared financial flows, shared support. And I think until we have clear outcomes that unite development and humanitarian actors, we're not going to get progress. That's starkly the case in respect of some of the most vulnerable, who are often women and girls. And an important part of our work is to try to make sure that we do reach the most vulnerable. So, second thing I want to say is that we need this focus on outcomes that unite different actors with aligned incentives. And until that happens, we're going to find that the whole is less than the sum of the parts. And that's a frustrating situation to be in. The third part of the agenda, I think, is about how those of us who are international actors engage with local actors, be they people or organizations. We are a large organization, but 95% of the people that we employ are local people in Syria or in northeast Nigeria or in Yemen. And we need to do a better job at making sure that local people are represented at all levels in our organization. And we're determined to do that, to increase our diversity and our inclusion. But we also need to make sure that the expertise, the genuine expertise that comes from international organizations is married to the expertise that comes from local people and local organizations. And that's a big part of our new strategic plan. I'm a great believer that it's wrong to believe that culture eats strategy for lunch, as some business executives tell you. I think that without strategy, you can't have an effective culture because people don't know what they're meant to be trying to achieve. Strategy is the way that means and ends are joined. And for us, in fulfilling our mission of helping people whose lives are shattered by conflict and disaster survive, recover and gain control of their lives, our strategic focus for the last 5 years has been about evidence, outcomes, value for money, cost effectiveness, and research and development. Going forward, we want to focus on impact, marrying views of clients to the evidence we've generated. We want to focus on scale, because there are too many boutique programs in the humanitarian sector. We need to reach scale, notably by working in partnership with local civil society organizations. We need also to invest in people, including to get a better balance across our network of locally hired people. We need to get the right kind of funding, because too much funding in the humanitarian sector is short-term when the problems are long-term. It's risk-averse when we need to embrace risk. But it's also about influence. Influence and innovation go together in my book, and everything that we advocate about is based on what we know and has been shown to work. I think that's an exciting agenda for the International Rescue Committee going forward, and it services our vision of trying to ensure that the example of our programs and the power of our ideas helps set new standards for all those caught up in crisis, whether they're served by us or not. Because we know that it is the empowerment of those people to change their own lives that holds the greatest capacity for international development. I've spoken for 12 minutes and 33 seconds, which I think is more or less what you asked me for. I hope it contributes to your discussions, and I hope that if you are interested in what I've said, you'll visit our website, www.rescue.org. Whether you're an employer or a donor or a thinker or just a citizen, we would love to hear from you. Thanks very much indeed for listening.
Thank you very much to David Milliband and his team. That was absolutely the kind of message we were hoping to hear, David. The message was sobering a bit, I think, but it was on point for today's proceedings, and we really appreciate your effort in sending us that video. Now it falls to me to close out today's proceedings. I really want to say thank you to all of our organizers and to all of today's speakers, panelists, and participants. I've spent the day jumping around from session to session like a kid in a candy store. There have been so many rich conversations. From a substantive point of view, many of the sessions, I think, focused on COVID, of course, and on our new ways of doing business. And I can tell there's great energy in the community to overcome this terrible pandemic and to find ways to deliver assistance more effectively in the future. As David Milliband just pointed out, we were already not on track to achieve the SDGs even before the COVID crisis. So it's incumbent on all of us to dedicate ourselves anew to this development enterprise. And as to the conference itself, let me tell you candidly that this virtual conference was a giant experiment for us. It seems to be going well. The platform works and we're having lots of lively chats in the main sessions and in the breakout rooms. I want to repeat my thanks to Roger Ford and Catherine Rafelson and their teams for helping us navigate through this new world. Also, even though today's sessions are concluding, I want to remind you that our virtual exhibit hall will remain open. Please stop by and check out all the booths. So that's it for now. We hope to welcome you back tomorrow beginning at 10 o'clock in the morning, Washington time. We have another jam-packed day, and I'm really looking forward to it. Thanks, everyone.